Okay, all right. The stock has not done much actually in the last 6 to 12 months. It's been pretty range bound. I mean, it's had its fair share of ups and downs, as you can see on the chart. But 12 months, I think it's a 10% gain that Bharti has seen. Just stay on, Prakash. What are your thoughts on KEC International as well? We have the management joining us now. Yesterday, the company announced order wins worth over 3,000 crores across its businesses. With these orders, KEC International's year-to-date order intake stands at a record level of over 18,500 crores. To discuss more on these order wins, Vimal Kejriwal, who's the Managing Director and Chief Executive Officer at KEC, joins us now. Mr. Kejriwal, good morning. Congratulations on these fresh orders. But tell us, would you like to scale up your order inflow guidance for the full year? Because year to date, your order wins are already at 18,500 crores. And earlier, you had said it would be between 18,000 to 19,000 crores, which is your full year guidance. Would you stick to it? Would you raise it? And what is the outlook for FY24?
So good morning, Sonia. I think the order intake is 18,500 plus we have an L1 of close to 4,500. So clearly we should cross the 20,000 mark. We've generally been talking about between 18 to 20. So I think we should be on the upper range of the band. As far as the next year numbers are concerned, we have been talking about a growth of around 15%, both in revenue as well as in the order intake.
Okay, all right. Hi, Mr. Kejriwal. Good morning. What about margins, sir? What kind of margins will you be enjoying on this sort of order? And also give us the duration that you have to execute this particular order.
So these orders are, we did not talk about the orders. So broadly, a large part of these orders are from the Jal Jeevan mission, So these are water pipeline orders. So these will be typically around 24 months or so. It also includes our first commercial venture, commercial building in West Bengal. That's roughly, I think, 15 months or so. And an oil and gas pipeline, which is again 15 or 18 months. So broadly, revenues will start accruing in from Q1 onwards. And margins, I think, typically margins on these projects would be between 8 to 10%.
Okay, 8 to 10% margins on these new orders, right?
Yeah, yes.
Okay, so this 15% growth in the order book for FY24 that you have projected, can you just tell us where is the order visibility coming in from? Are you seeing larger number of orders come through from railways, for example, where the government has a big focus area now? What are the nature of these orders?
Unfortunately, railways, at least for us, has been a bit of a laggard in terms of order intake also. With the current budget which has been announced and the increase in the capex outlay, we do expect that there will be an increase in the tendering, etc. But I think from the day the budget is tabled and by the time it gets converted into tenders, etc., it takes around 2 or 3 quarters. So I think the tenders will start coming into Q3. But we are seeing a large amount of tenders in our traditional T&D business as well as in civil. So I think these are the areas where the growth will come from.
Okay, all right. Let's talk about civil then, Mr. Kejriwal. I recall we talking about when KEC was doing roughly around 1,000 crores odd in terms of revenues. At the 9-month mark, you've already done 2,200 crores in civil. And you're getting a large chunk of orders from civil, and that's showing some traction as well. So give us an outlook on civil. From here on, where do you see this year ended first in terms of revenues on civil? And since you've got a good order pipeline, next year, how much will civil grow by?
So, Nigel, our civil order book, if I'm not mistaken, is roughly around 11,000 crores, including the current orders. So this year we should end up roughly, I think, approximately 3,500 crores should be the revenue from civil. And next year with the order backlog, we should have, I think, almost a 50% growth in civil. So we should be at least around 5,000 crores in civil in revenue next year.
Oh. 5,000 crores in civil in terms of revenues.
Yes.
And what are the tenders that you are participating in over and above what you have done already?
So civil would include all sorts of tenders. That would be railway, metro tenders, metro stations, viaducts, water, data centers, a huge amount of residential tenders. Industrial is, I'll say, slightly on the lower side, but residential are large. And public spaces, as we call them, government buildings, large buildings.
Okay, all right.
So in these, you said 5,000 crores of civil revenues is what you're looking at. Is there scope of increasing your margin profile here? Overall, would the blended margins go up?
So hopefully next year the margin increase will come from more from civil, because most of these orders, Sonia, has a sort of a pass-through on cost. Civil has a better system of pass-through, etc. So generally what
Yes.
happens in civil is you are able to sort of maintain your margins at which you are quoting. So and also the working capital surprisingly is better.
Okay. All right. Mr. Kejriwal, let's focus on the Brazil operations. I think last time you mentioned that you'll start reporting an operating profit from Q4, but on the PBT level, it'll still be a loss, right? So when does the PBT as well turn into the profit for the Brazilian operations? And since you mentioned operationally you'll do well, I just wanted to understand what is the debt in the books of the Brazilian operations, if you could give us a rough number, and the borrowing rate as well for that debt in the Brazilian operations.
I think the debt, I'm not sure, but I think it's roughly between 400 to 500 crores. That's the number
Yes.
of the debt. And basically, it's a loss funding which happened over the last couple of years. So that's been funded by debt. The interest rate there is typically between 18 to 22%.
Yes.
So, which is where I've been saying that we'll have an operating profit, but we'll have a PBT loss, because we will need to restructure that balance sheet, and we are working on refinancing the debt. Okay.
Okay,
This is
so when do you turn to PBT profit then, Mr. Kejriwal, in Brazil?
I think we expect that hopefully by Q2 end or Q3, we should be PBT positive, because by that time we would have refinanced that entire debt, etc. The second piece is that, Brazil is part of our SAE operation. So SAE has Brazil as well as Mexico. And Mexico is also doing well. So I think at a combined level, we should become PBT positive by Q2 end or Q3 in any case.
Oh, that's great to hear. So Q3 FY24 is when you'll be PBT positive in the Brazilian operations, correct?
Yeah, yes.
Okay. Can you tell us what's happening with the Afghanistan project as well? I think your collections of about 260 to 300 crores was stalled. What's the status today?
So right now the money is still stalled, but our expectation is that in the current quarter, we should be getting around 200 crores from a couple of people, one of the lenders, one of the insurance agencies, etc. So I think a large part of it, as I said, around 200 crores should come in by this quarter end.
Okay, we leave it at that, sir. Thanks a lot for joining in and speaking to CNBC-TV18. That's Vimal Kejriwal of KEC International. Prakash Diwan is still with us. Prakash, the problem here is, if you look at the stock, say over the last 2 years, right, it has done nothing. 2 years back, the stock was at 400. Today, the stock is at 480. You think there's anything here for investors?
So, all these numbers, and especially the kind of build-up on order book and all, definitely seems very promising. But remember, this is a business, Sonia, which comes with a huge level of lumpiness, and margins are always at ransom. There is no way you can you have the ability to stretch margins beyond. In fact, I heard him talk about 11%, 11%, which is fairly impressive. But the corollary to this is, if you ask me, what do I take away from this conversation? The sector is booming. People who are in this space are doing so well, and look at just flip it and look at what the leader is doing. So what KEC is getting a lot of the business is what L&T is letting go of. And if you take the likes of L&T, they have chosen to they've decided to go for business for contracts which are very high on margin accretion. Now, if they are talking about KEC is talking about 10-11%, and if L&T manages to get 12-13% on some of the larger contracts that they are executing, you can imagine what that could do to L&T's order book and execution. So go with the leader. You will probably have less ups and downs and a very steady flow of sorts. KEC, of course, is as you said, is still in a formative growth stage where it has to establish. But it's a great franchise. There's no doubt they have great execution skills. But when you have an L&T available within the same space, I don't know whether KEC would make the grade at this point in time.
Okay, all right. Prakash, just stay on. We'll take a quick commercial break on that note. Lots more coming up on the other side. Before we slip into a break, let's tell you what's lined up in the next half hour of the show. We'll have Anuj coming in just a bit to give us a quick trade setup. Post that, we'll bring you the top stock picks for the day from our technical and F&O experts.